Chief Executive Officer of Canary Capital, Stephen McClurg, has predicted that XRP ETF from BlackRock is possible within 2026. Before we dive inside his claims, we will first see where XRP ETFs stand so far. But first, let's briefly explain what ETF is so even complete beginners can follow the story. An ETF, or exchange traded fund, is an investment product that trades on the stock exchange, similar to a stock. XRP is now being accessed through regulated investment products that sit inside traditional financial markets. It means investors can gain exposure to XRP through normal brokerage accounts, instead of going through a crypto exchange, setting up a wallet, managing private keys, or dealing directly with blockchain custody. That does not sound dramatic, but for traditional finance, it matters. Many investors, advisors, funds, and institutions don't operate the way crypto native users operate. They often cannot simply open a crypto wallet and buy XRP directly. They need products that fit inside existing compliance systems, reporting tools, custody rules, tax treatment, and portfolio management platform. ETFs and similar exchange-traded products are designed for that environment. The important point is not only how much money is currently inside the products. It is that XRP now has a more formal access route into traditional finance. For years, XRP's biggest obstacle in the United States was not only market sentiment, it was regulatory uncertainty. Large financial players don't usually build serious exposure around an asset if they believe the legal environment is unstable. Even when they are interested in the technology, they need clarity around custody, trading, reporting, and risk. That is why these ETF products are meaningful. They suggest that more parts of the traditional market are becoming comfortable enough to build financial products around XRP. That includes issuers, exchanges, custodians, market makers, and investors who prefer regulated access instead of direct crypto ownership. But this still needs to be understood the right way. ETF demand is investment demand. It is not the same thing as payment adoption. If investors buy shares of an XRP ETF, that does not automatically mean banks are using XRP for cross-border settlement. It does not mean companies are using the XRP ledger for tokenized assets. It does not mean XRP has suddenly become a standard bridge asset across global finance. Those are different forms of adoption. Investment adoption means XRP becomes easier to include in portfolios. Payment adoption means XRP is used to move value between currencies or markets. Ledger adoption means more activity happens directly on the XRP ledger, such as tokenization, settlement, trading, or stablecoin usage. These categories can support each other over time, but they are not the same. That distinction is important because ETF headlines are often treated as if they prove every part of the XRP thesis at once. They do not. They prove something narrower, but still important. To put it simply, XRP is becoming easier for traditional investors to access through familiar financial infrastructure. This can affect the market in several ways. First, it can improve legitimacy. When an asset is available through regulated products, some investors view it as less fringe and more investable. That does not remove risk, but it can change perception. Second, it can improve liquidity. Liquidity means the ability to buy or sell an asset without causing large price disruption. If more regulated products bring more participants into the market, XRP can become easier for larger investors to trade. Third, it can create a more durable access layer. Instead of demand depending only on retail exchanges and crypto native speculation, XRP can be held through products that fit inside traditional portfolios. Still, this should not be exaggerated into a guaranteed price explosion. ETF access can support demand, especially when investors are adding capital to the products. But XRP's price still depends on broader market conditions. Bitcoin's direction, overall crypto sentiment, interest rates, liquidity, regulation, and actual usage on the XRP ledger can all influence price. ETF growth can help, but it does not control the entire market. They make XRP easier to access, easier to hold through regulated channels, and easier for traditional investors to consider. That is a serious step for an asset that spent years under legal pressure in the United States. but the long-term question is still bigger than ETF access. Now let's dive inside XRP ETF numbers so far. As of April 24, 2026, a live XRP ETF tracker shows 7 active XRP spot ETF products, with about 787 million XRP locked and roughly $1 billion to $1.08 billion in total dollar value, depending on the exact XRP market price at the time of calculation. Among institutional investors holding shares of XRP ETFs, Goldman Sachs is the absolute number one, holding roughly 73% of the top 30 disclosed institutional XRP ETF positions. And among ETF products, Bitwise and Canary Capital are among the largest XRP holding funds. And speaking about Canary Capital, we are heading inside our second topic because their chief executive, Stephen McClurg, publicly said that XRP ETF from BlackRock is possible in 2026. But the first thing that needs to be clear is this: BlackRock has not filed for a spot XRP ETF. There is no confirmed BlackRock XRP product waiting for approval, and there is no official statement from BlackRock saying that one is coming. McClurg's claim is a market expectation. He said he would not be surprised if BlackRock enters the XRP ETF space by late 2026 or early 2027. But that is very different from saying BlackRock has already made that decision. Distinction matters because BlackRock's name carries enormous weight. When investors hear BlackRock and XRP in the same sentence, it is easy for the story to turn into something bigger than what was actually said. Confirmed story is not that BlackRock is launching an XRP ETF. It is that the chief executive of Canary Capital believes BlackRock could eventually enter if the market keeps proving there is enough demand. And that is where the numbers become important. The existing XRP ETF market has already shown that there is real investor interest. These products reportedly reached close to $1.6 billion in assets earlier in 2026, before moving back closer to the $1 billion range after roughly $500 million in outflows. That movement does not make the market a failure. It shows that the first wave of demand was strong, but it also shows that the category still needs to prove durability over time. For a company like BlackRock, that durability is probably more important than a strong opening month. BlackRock does not need to rush into every new crypto product just because smaller issuers move first. A firm of that size usually looks at market size, client demand, liquidity, regulatory comfort, and long-term commercial potential. It simply wants to know whether the product can become large enough and stable enough to justify the resources, reputation, and operational work behind it. That is why McClurg reportedly pointed to a much higher level of assets as an important signal. If existing XRP ETF products move from around $1 billion toward $3 billion or more, that would tell the market something different. It would suggest that demand is not only coming from early excitement. It would suggest that investors are continuing to allocate capital after the launch phase is already over. That is the kind of signal a major asset manager would care about. BlackRock is not just another ETF issuer. It is the largest asset manager in the world, and its iShares brand already plays a major role in crypto exposure through Bitcoin and Ethereum products. That history shapes expectations around XRP. If BlackRock eventually decides to file, investors would likely read that as a sign that XRP has become large enough, liquid enough, and institutionally relevant enough for the biggest ETF player to take it seriously. But that does not mean BlackRock has to be first. In fact, McClurg's point appears to be the opposite. BlackRock often does not need to be the first company into a new segment. Smaller firms can test the market first. They can prove whether investors want the product, whether spreads are manageable, whether custody works smoothly, and whether demand lasts beyond the initial trending headlines. If that demand becomes large enough, then BlackRock can decide whether the opportunity is worth entering. There is also a competitive angle. If another large asset manager moves deeper into XRP, BlackRock may have more reason to respond. Asset management is not only about being early, it is also about not letting competitors control a category that clients may eventually want. If XRP ETFs continue growing, and if institutional clients start asking for exposure, BlackRock's absence could become more noticeable. That does not guarantee action, but it explains why McClurg sees a possible timeline in late 2026 or 2027 rather than immediately. The more important signal may come from the type of investors entering these products. As we already mentioned, Goldman Sachs has been reported as the largest known institutional holder of XRP ETF shares, with a disclosed position across multiple spot XRP ETF products. That kind of participation matters because it shows XRP exposure is not limited to retail traders. It is beginning to appear inside the portfolios of major financial institutions. For BlackRock, that type of demand would matter more than online enthusiasm. Retail interest can create attention, but large ETF businesses are built around repeatable demand from advisors, institutions, and long-term allocators. If pension funds, endowments, family offices, wealth managers, or other professional investors begin treating XRP exposure as a normal portfolio discussion, the case for a BlackRock product becomes stronger. This is also why the outflows should not be ignored. A market that rises quickly and then loses part of those assets is not necessarily weak, but it is still being tested. BlackRock would likely want to see whether assets stabilize, whether inflows return, and whether XRP ETFs can grow without depending only on launch momentum. The difference between temporary excitement and durable demand is one of the central questions in this story. For XRP, a BlackRock filing would likely have a major psychological impact. It would not change the XRP ledger overnight. It would not mean XRP is suddenly being used by every bank for payments, but it would send a strong signal that XRP has become serious enough for the largest traditional asset manager to compete in its ETF market. That kind of signal can change how investors perceive XRP. It could bring more attention from financial advisors. It could make XRP easier to discuss inside traditional portfolios. It could improve liquidity around XRP investment products, and it could create pressure on other large institutions to decide whether they also need XRP exposure available to clients. But the story still needs to stay grounded. McClurg's prediction is conditional. It depends on continued growth, stronger institutional demand, and a market that proves it can support more competition. Until BlackRock files, this is not a confirmed product story. It is a market structure prediction story. The current XRP ETF market has already opened the door. Canary, Bitwise, Franklin Templeton, 21 Shares, Grayscale, and other issuers have shown that XRP can sit inside regulated investment products. The question now is whether that market becomes large and stable enough to attract the biggest name in asset management. If that happens, BlackRock's entry would not be the beginning of XRP ETF adoption. It would be a sign that the category had already become too important for the largest players to ignore. And that brings us to the end of this video. Now you understand why BlackRock's absence from the XRP ETF market matters, why Stephen McClurg believes that could change. If you want to keep learning, make sure to watch one of the 2 videos that just popped up on your screen. Also, remember to subscribe to the channel, hit the like button, and let me know in the comments if you think BlackRock will eventually file for an XRP ETF. Thank you for watching, and I will see you in the next video.